All right. Can everybody hear me? Okay, perfect. Yeah, I just decided to give a little bit of extra time, because, this call's a little bit earlier, than the usual, like 12 o'clock. This one's obviously at 11:30. And when I had initially started the call, there was a whopping 10 people in the waiting room for like, I don't know, 2 or 3 minutes. So I figured maybe either people forgot. But anyways, I just decided to give a little bit of extra time. Um, But yeah, so topic of today's call. Let me just share my screen so you guys have something to look at other than the trading shelter logo. Let's see. All right, you guys should just see trading view up. But yeah, topic of today's call. So essentially, what I really wanted to touch upon, because it's kind of something I don't really get asked about it a lot, but I just happen to see it a lot. Tradeaways slash inducements, like, basically the same thing versus targeted liquidity, because at least something I see a lot is like a simple liquidity target will be marked as an inducement, and that can kind of, you know, spark some doubt as to why, the market didn't reverse, because like technically it is a let's say like a previous daily high or something, but it could just be targeted liquidity and not an actual inducement, right? And I'll dive into the specifics as to, how to differentiate the two. Obviously, chart examples as well. I do like that. Another thing I wanted to touch on is essentially, just in short, dynamic bias development. So it's kind of like, um, I don't know, just from remaining very open when it comes to identifying and creating a bias for the day, because especially intraday, like it's a little bit different when you get into higher time frame stuff, but on intraday specifically, you can have like a complete bearish day of price action, even though the, main trend on like the 1 hour, 4 hour daily, whatever, is bullish, right? Because at some point, you guys know markets just don't go up in a straight line. At some point they have to pull back before, just continuing the trend, right? Which would result in like a day to maybe a week of bearish intraday price action, right? So you need to kind of understand that, at least in the scenario that I just made up, if you're bullish, you could still have bearish days of price action, right? You just have to understand that you're in the pullback phase of the market. Um, but yeah, it's kind of stuff like that. So first thing I wanted to start on, this, kind of do like the same format as before. I quite like this format, so if you guys don't like it, just let me know, and I'll change it. But I just kind of like doing like the lecture portion at the beginning, and then we get into the actual specifics and practical application of the subjects afterwards. Um, but yeah, so really starting off, like I just said, difference between main inducement versus targeted liquidity. So kind of the definition in my head, the working definition, is that an inducement is meant to trap people in the wrong direction of the market, right? So just simply, just because it's on my screen, if you just look at EU, you can very clearly see, like I could see two clear inducements, right? Or three actually. Yeah, this one, which is very early, but this, kind of sets the tone for the inducement during Frankfurt, which the low is put in just about here. And then lastly, you have the inducement of the previous daily high, right? So like basically all three of these movements get people in the wrong direction, right? Nobody's entering here, right? But coming into um, the trading day, people will reference this price action, right? They'll just see a bearish structure shift, and I mean, you can even see the reaction from the larger smart money trap. People try shorting from this POI up here, right? All that good stuff. Um, so this is an inducement because it kind of essentially solidifies a bearish bias, at least intraday, for traders. Here, right, you have this set of relative equal lows. You have like this low and this low here. You can even slightly adjust it to this over here. I like this point better. It's a little bit more developed. And then this is essentially a continuation of this inducement low, right? And this just mitigates it, right? You can even see it fills the imbalance here. Um, guy over here, right? Yeah, right. So basically, what these two inducements are saying to everybody that trades, traditional strategies such as like breakout and just structure, um, is that the market is bearish, right? Then once the price induces Asia high on the previous daily high, everybody's like, oh, okay, well the market's bullish. Um, and you can just see immediately price pulls back on them, right? So point I'm trying to get at is an inducement has the purpose of trapping people in the wrong direction of the market, right? Without using the same word in the definition. Well, I guess it's not the same word, it's just the same root. It causes traders to be induced to enter the market, right? That's what an inducement does. It like persuades them to enter essentially. Um, a really good way to think about it is it's visualized FOMO or like fear of missing out in the form of candlesticks, right? Like I forget where I saw this. It was just like a couple of years ago or whatever, but somebody had said or mentioned that essentially all of price action, like at least candlesticks, it's just human psychology plotted on a chart, which is I thought was pretty interesting. I haven't really dove in deeper as to reasoning behind that. Had a little quote that I heard, but this is my interpretation of it because it makes sense to me. Hopefully, it makes sense to you. Um, yeah, and it just shows the majority's bias, right? And the whole purpose of that, the inducement, is to trade away from it. Hence, tradeaways and inducements, basically the same exact topic. On the other end, right? So we have targeted liquidity, and that's simply just when liquidity is swept. It won't necessarily always lead to a reversal because at some point the market has to actually get into a trend, right? Because I've went over this example before. If every liquidity sweep was simply an inducement, your chart would end up looking like this forever, right? Because sweep a point here, reverse, because that's an inducement, and then you just continue so on and so forth. At some point, the market has to either start trending bullish or the opposite, it's bearish, right? Which means, let's say when the market switches here in this little very basic scenario, all of the targeted liquidity becomes the buy side liquidity beneath these lows, right? Meaning if we've established that we should be trading bearish after, let's say the relevant break of structure, and there's a very nice major inducement to the left, or medium inducement, it induces equal highs as well. These points of liquidity below the structural lows just become targeted liquidity, meaning that when they're swept, it won't lead to a full-on market reversal in terms of it won't make a higher high on whatever time frame you're on, but it can lead to just a pullback, right? This was a 1 hour chart, following the 1 hour relevant breaker structure. This could be a full day of bullish price action, right? But ideally, at the end of that bullish day, right? Like let's say this is like Asia session or something, and here, um, not a little. Ideally, you have some sort of inducement here to just continue with the overall main trend, right? And then same thing with over here. It's just going to result in pullbacks. It's not going to lead to a full-on market reversal, right? I hope that's pretty clear. Um, I feel like it's a pretty easy topic, but like essentially what you just have to identify where the inducement is, right? And like that'll give you the direction to trade in, right? And then, just the liquidity targets are going to become targeted. It's going to become targeted liquidity, not necessarily an inducement again, right? So I just want to go through some examples, specifically on EU. I really like using EU's price action when going over examples. But if you just start on the 1 hour, right? So essentially you have two previous weekly lows induced here. That this bit of price action, I think I went over this bit here on last week's call, right? So kind of just looking at this right away, you can see the medium inducement of the previous weekly low about 2 weeks ago, right? Just on the 1 hour, right? Coming into the Monday of the next week, we induced the other previous weekly low. These are both previous weekly lows, right? So we saw, at least on the intraday time frame, right? I went over this in depth last week. So if you guys missed that call, I would hope either all of you guys were on that call or you had watched the recording, but I don't want to repeat myself too many times. But we essentially saw that this bit of price action was a developed inducement on the intraday time frame, which corresponds with the, um, breaking below the two previous weekly lows, right? Therefore, we can begin to anticipate bullish price action, right? And the kind of the targets that I got into last week, I believe they had already been met at the time of the call, but just looking at this right here, you can see like you have a perfect trend line. This will be a lot more developed on say the 15 minute, but you can even like just by looking at the wicks on the 1 hour, like this will be more developed structure on the 15 minute, and you can see basically one, two, three, four taps of the trend line here. This is like your little wedge pattern, which induces bearish traders, right? Because I don't know if you guys have ever traded those kinds of patterns, but like the wedge breakouts, whatever you guys want to call them, just break and retest and the price puts in a new low, right? So this obviously is a very clear liquidity target. It's really the first one. Um, Intraday, at the time of this inducement, really the first target, at least for intraday time frame, would be this because these are equal highs, which is a lot easier to see on the 5 minute. But you can see this becomes the first significant liquidity target, right? This isn't that developed on the 1 hour, right? So I'm just using the time frame that I'm referencing here. Um, but yeah, this is the first developed point here. And you could see once we meet the liquidity target, that's when we begin to have, a pullback in price action, which then targets or takes some buy side liquidity, right? But it's just a pullback. That's what, you know, kind of need to understand. And you can also a really good indication if you're kind of confused too is just use the same techniques that you already know regarding in this case at least the fake break of structure, because you can see right after we take the point of targeted liquidity, price has a bearish break of structure with speed and momentum. I mean, you can see it clear as day. You have speed on the way up and speed on the way down. If you have it in both directions, right? So something like this, like let's say you have some little bit of choppy price action, then you have this and something like that. More than likely, that's going to be it's going to result in a whipsaw, which means the high will get taken again, right? Because you have an inducement high, right? Well, this wasn't even really an inducement in this case. It just takes the targeted liquidity, and then immediately you have a actual inducement low, right? Which corresponds with the main inducement, or correlates with the main inducement that we're trading away from, right? I hope that makes sense. In the next coming days of price action, you could just see like you just have order flow mitigations of all this, but we know that the next liquidity target becomes this point here. Again, it's targeted point of liquidity because at this point the market would just be making a new high if we're trading away from this, right? Pullback and we're anticipating a new high, right? Therefore, once this high is taken, we can expect a pullback, not a full-on reversal, right? I hope that makes sense. You can reference price action to the left as well. I mean, you can see immediately after we induce this point here, price pulls back slightly. Well, not slightly. That's a decent amount of pippage. It's about 75 pips. But even, referencing to the left as well, you can see another liquidity target. Really, the next developed one um, will be here, which correlates with the high that was put in. And then just referencing the left as well, you have these equal highs. You have 4-time equal highs. You can see that price creates, you know, well, two more equal highs after these two are already left. However, if you look slightly more to the left, you will see that we essentially have made more equal highs with this point here, right? So, kind of the point that I'm getting at, I still don't necessarily view this as an inducement to trade away from, right? I still, kind of have eyes set on this level just because of the equal highs that were created. Ideally, what I want to see though, at least is something like this. So you get the actual fake break of structure to, it, in this case, this would be if you have the fake break of structure, the fake break of structure would act as an inducement, right? Because this is getting traders into the wrong direction of the market, right? Kind of like the whole point of what I've been trying to explain on this call so far. So, and then at that point, more than likely it'll just do something like that, right? Or maybe it pulls back deeper into this inducement POI, but that's kind of just what I want to see. Or, it could just do the least favorable thing and just immediately shoot up and induce that high, right? So We go into intraday too. It's really the same concepts. I just like doing the higher time frame first because I think it's a little bit easier to analyze, in my opinion. Because I don't know, it's a lot more. It moves more slow and it's a lot more laid out in terms of you can see what's significant very quickly. But yeah, we hop over to the 5 minute. Actually, let me clear my chart first, and then we'll just get into some of this week's price action. Kind of go over the same examples, right? So this was kind of, this was the fake break of structure, right? That we had discussed. Let me zoom in so you guys can see that a little bit better. So this is the inducement. This is essentially this point here just took targeted liquidity. It's not really an inducement to trade away from in terms of like an everlasting inducement on price action, right? This is, like I said, we anticipate this high to get taken, and then this is the actual inducement, which gets people in the wrong direction of the market, right? Therefore, get into the kind of the following days of price action, right? When we have price action such as this, where we induce Asia low and allow, just sell side liquidity to enter the market, this is getting traders in the wrong direction, meaning, this kind of all of these events in price action have the characteristics of an inducement, right? Because it's getting people in the wrong direction of the market. We know that this low is protected as it's the inducement to trade away from. Therefore, you just wait for simple confirmations. You have the relevant break and then the pretty nice mitigation of the 5 minute imbalance here, right? That makes sense. Although I can look at it. I know I kind of went through that really fast. I'm going to dive into more examples, but I just want to make sure everybody's, understanding for the most part. Uh, oh no, I have my Celsius right next to me. Somebody, Miro asked that. Okay. Uh, doesn't seem like anybody has any crazy questions, so I'll just continue. Right. And really, until we met um, this target here, let me move this up, which is, obviously this is the higher time frame fake break of structure, meaning that this is the inducement to trade away from. This high is targeted. Whatever's up here is just a smart money trap later on. Um, and any inducement to the or any sweep of significant liquidity to the downside is a proper inducement, right? Because it's getting people in the wrong direction, like I said, 10 times. So even here, you can just pretty easily see that sell side liquidity is entering the market. Let's see, high. Okay. Breakouts are a little bit smaller, but they are still valid. And then on the intraday level, we induce Asia low, it leads to the inducement of Asia high, which gives a very nice sell. I believe I spoke or shared a chart regarding this at some point. Um, and then we induce the current daily low, and you can see, based on the characteristics, it taps in deeper into the inducement of the previous day, which correlates with the actual main inducement, right? Like all this price action here, essentially, from Asia high to the low of day, right? This is just the pullback, which takes out everybody, right? The take out all sell side liquidity, and then price just does the same thing. It allows sell side liquidity to enter, right? Induces them by the characteristics of the speed and momentum to the downside, and this becomes the point to trade away from, which immediately leads to a new high being put in, right? But notice how after you have, at least in this case, a new high of day set, which takes out the previous daily high as well. You don't like this low is still protected because essentially right now you're having just order flow. This is the inducement, and then this is the kind of the first order flow mitigation, and then this is the second, and then this ends up being the third over here, right? Um, so these points are all protected because this is the low, like the main low, and these are all relative, in terms of range. It's very close to the overall low, so there's no reason to take those out. And you can just see when the market makes a new significant high, right, such as this, it just leads to a simple well, in this case, it just mitigates the entire extreme, but it leads to a pullback in price action. It doesn't lead to a reversal that ends up targeting, prior days lows or whatever, right? You can see even here, once market puts in a new high, it actually meets the overall targeted liquidity, right? Which is main high here, and then price simply has a pullback right here. You guys need help identifying this. You spent just draw a very simple trend line, and you can see that it gets induced low on the wick, right, and then it shoots up, right? Here, it's pretty easy. I thought price action on EU on actually like GU better yesterday. But you have relative equal highs at Asia high, right? And then you have a set of relative equal lows. I know it takes it, but um, I mean, if you just think critically, 0. 0.7 pips, they're still equal lows, right? Um, and price creates the internal fake breakup structure here, which creates a smart money trap either here or here, both those points. Anyways, the point I'm trying to make is we know that Asia low has liquidity beneath it due to the fact that there's a smart money trap. I mean, obviously you can kind of see that it's at this point here because this is the point which has the reaction. The extreme, like just below it, doesn't really do anything. And then market allows for sell side liquidity to enter, right? The first point is really here. That's the second break of structure. Um, but yeah, and then this leads to an internal break of structure here. And then this is just all order flow, right? On EU yesterday, at least for me, I wasn't a fan of how it hung out in this area for a long time because once it comes back into the mitigation, it's kind of just hanging out for an hour and a half. But still, point I'm trying to get at is when Asia low is induced, right? The entire day has been, aside from here, has been composed of sell side liquidity, right? And even, if any of the smart money traders entered off of the SMT, we know that they're taken out, which brings, more sell side liquidity into the market because a buyer's stop loss to get out of the trade, they have to sell it back, right? Which, kind of brings more sell orders into the market. Um, and this is just a trap into the wrong direction. And then this becomes targeted liquidity, right? Like that's really all like you have to just simply identify where a trader's getting trapped, right? Like what's the wrong direction? That's the inducement slash trade away. I like the word inducement better. Um, I just used it for a while, so yeah. Um, and then yeah, you just trade away from the inducement, because that's where the term trade away comes from, into targeted liquidity, right? But you have to identify first of all, like what the first point is of target liquidity. Expect a pullback, not necessarily a full-on reversal, because kind of what I dove into on the 1 hour, was trying to get at is that EU is bullish at the moment, right? At least, for the past week or two. Um, Therefore, when I knew what highs are taken, just expect a pullback in price action rather than a full-on reversal that's going to last uh, quite some time, right? So same thing here. This leads to I already dove into this PA, but uh, pullback in price, right? This is an inducement low, right? You can tell kind of when the inducement's over because first thing you want to look for is speed, and then the next is some sort of bullish reaction away from it, right? And yeah, you can quite clearly see once after it mitigates, you have the relevant break of structure, and then it reaches the targeted liquidity here, and price pulls back, right? However, like I said earlier, if I zoom out to the way left, I don't know where it well or where I put it. Oh, I think I deleted it by accident. Uh, yeah, just drag that over, and more than likely, at least in my opinion, the high will get taken again at some point. Um, Kind of my favorite scenario, like I already touched on, is if Asia low is induced, and then before targeting the high, that would be quite nice, but we'll see what happens. But yeah, At some point, the market does have to pull back, but that doesn't mean necessarily it's going to be a full-on market reversal. It'll just be a pullback, just to engineer um, sell side liquidity, right? Like this. You have your first structural break, then you have your second one. So now you know that, sell side liquidity is beginning to enter the market. Breakout traders, second wave of breakout traders. Third grouping of those guys, they're immediately taken out, which just acts as a fake break. That's the first bullish shift, and then the trend or the at least the pullback resumes bearish, right? And the whole purpose of this, right, is to simply just build sell side liquidity to be targeted later on, right? Here, right? I think that makes sense. Um, if you guys have any other questions, just let me know. I wanted to go on to UF, kind of go over the same bit, right? So starting on the 1 hour, well, right off the bat, right, just kind of looking at immediate price action. Oops, I forgot I have that color or specific to the time frame, and I changed the wrong thing. Okay, go. Kind of what I'm getting at here is you have the characteristics of an inducement up here, right? And then, price eventually leads to a relevant break of structure on the higher time frame, right? This was a very nice day of price action. I believe Benny went over it on the hot seat last week. I think it was this day. Um, but yeah, this was just a fake break of structure. Again, in this case, right, if we've identified this as the inducement, right, new low is put in here, right, when Asia low is taken pretty much here. Um, and then you have this is Asia high, right? Because I don't know if you guys remember, but from last week's call, um, this Asia range is incorrect on UF on Forex.com. Um, so when we have this bullish structural shift here, right? What is that doing? It's just simply trapping people in the wrong direction of the market, right? Therefore, it's an inducement. That's why always say a fake break of structure is a form of an inducement. Um, for like, kind of first and foremost, it makes the most sense to me, and it has the most logic behind it, in my opinion. This isn't as a form of an inducement. It's very simple. Um, just kind of like when you start focusing on intentions, like you can appreciate it a lot more in terms of what um, you know whatever higher powers control the market are trying to do with that bit of price action. Um, but yeah, you can simply see this is a break of structure, a change of character, right? So smart money traders, at least when I was trading smart money, I mainly use the 4 hour and 15 minute, but let's say this was a 15-minute chart. I remember exactly how I'd do it. I'd view this as a change of character, right? Because you have the sweep of the low, then sweep of the high. That's the bullish change of character. And then I see this massive wick here. So then I drop down to the 1 minute, right? And then I would find within the 15-minute POI, 1 minute POIs, right? That's how I would trade smart money concepts at the time. Um, but yeah, like you can just see, even the reaction, taps the wick in. You can see the pullback. This is just simply enticing traders, right? And then this is the inducement, which traps them in the wrong direction, right? And then this is obviously the inducement, the main one to trade away from. This is a continuation of that one, right? So following the next few days of price action, this all becomes targeted liquidity. You can just see the trend line, right? So yeah, at this point here, you have this low, you have this low, you have that low, you have that low, you have this low, right? This is all targeted liquidity, right? So a large majority of it is swept the next day in price action, which leads to a reversal on intraday, right? Here. which, you know, acts as an inducement, right? However, kind of following into the next day of price action, you have a bit of a whipsaw here. And when I say whipsaw, that just means if you have like Asia range and then you induce the low, then the high, then the low, then the high, price is just kind of whipsawing back and forth. Um, you can see it in this day's price action. It's just low, then the high, then the low. Then, after the low is induced, it ends up to go on to take out the high again, right? Um, I was just looking at this. At least what I see off the bat is you have three highs, right? So you have this high, which is the extreme. You have this high, and then you have this high. You can kind of view this as a channel. It's what makes the most sense to me because then on the flip side, you have that low, that low, that low, that low, right? You can just kind of see right off the bat, all highs and lows are grouped fairly close to one another. So at least for me, you can just have it drawn as something like that. This is just one way that I like to view, or that aids me in viewing an inducement. And then you can very clearly see it's induced high to go lower, right? And it takes out the extreme or the origin of the bearish channel, right? So once we establish a channel, you just wait for the inducement, right? And ideally, if price wants to move lower, it should induce it higher because if it was on the flip side, right? And this kind of gets into the whole uh, remaining dynamic in your analysis is that if it was induced to the low side, and let's say it takes out this low too, you probably want to trade away from that because you don't induce low to go lower, you induce low to go higher, and then you induce high to go lower, right? So you just kind of react to what's unfolding right before you, right? So again, this now becomes an inducement to trade away from. The high of it is set here, and then just has a structural break. You can see the pullback there, and then that leads to a new high of structural break kind of right at the beginning of Asia session the next day, which acts as a relevant break on a larger time frame. This will be a little bit easier to see on the 15-minute, right? And then I hope this isn't too condensed, but everything I kind of like this on the 1 hour. It's a bit easier to map out everything without getting caught up in the noise too much. And then you can just see you have another fake break of structure to the top side. Price fills a 1 hour imbalance here. It continues with the main direction, right? So if we know we're trading bearish, it's the main inducement here. We're trading away from that, and at least logically, good target this point here, right? Because it's kind of the swing low that leads to the high, right? We can view this low as targeted liquidity, and that just leads to a pullback, right? Notice how it doesn't lead to a full-on market reversal where it starts reaching for this high and this high, kind of stuff like that, right? And then same thing, this was very clean yesterday. On UF, you can see the inducement of relative equal highs, right? I would classify these as relative equal highs, right? Going into this day, you induce the previous daily low, right? Um, then you have the first bullish structural shift here, and then you begin to build buy side liquidity there. Uh, I have no idea what that just magneted onto. So you begin to have stop losses here, right? And then once Asia high is broken, um, you have a stop loss beneath this low, right? Because this is the first shift that's external, and then this is the second one, right? So there's stop losses beneath here, and then obviously since Asia high is broken, you have stop losses beneath Asia low as well. You can put some guys here because you have the pullback and then a new high. You don't need to refine it too much, and then this is a very small fake breaker structure. You can see the reaction here, right, from the smart money trap. Price once again induces it, then leads to, which is a bit easier to see on the 1 minute, the relevant break in here, and there's a beautiful mitigation. You have quite a few entries available here and here, and then the order flow falling away, kind of trading away from it. But yeah, um, this is now the main inducement. Kind of, once you have this point here, you can begin to start looking for a reversal, right? Which would be the inducement, because this is now the inducement phase of the market. To look to target the targeted liquidity and a really good indication of which side is being induced is just by looking at which side of liquidity or which direction they've built liquidity in for the current day of price action. Like quite clearly, they're building buy side liquidity. So chances are the inducements, especially since we're trading away from a significant inducement high on the higher time frame, chances are, the inducement on the intraday will also be high to trade away from to target the buy side liquidity that's been built up during the day. So kind of the point I'm trying to get at is targeted liquidity is simply the liquidity that's been built up to serve, without using the same word again, but I kind of have to serve as targets, which it leads up to the main inducement, right? So you're building liquidity, right? Leading up to the main inducement, trade away from and target that, right? So price, at least at today's price action, induces it during Asia. I mean, you can see that, after this inducement, sell side liquidity comes into the market. You have equal highs at Asia high, and you just met a target over here. But what I view this now as is similar to EU, or actually not yet on EU, but it's similar. I view this, I have anticipated that price will move slightly lower to take out the swing low on UF, is that this is going to serve as a fake break of structure to, at some point, there's no clear inducement at this point yet. You need to see some sort of speed to the upside. Um, but this will serve as a fake break of structure, in my opinion, to, lead to further bearish price action, right? Especially if we have the target down here. Um, and yeah, like this simply is just a day where they allow sell side liquidity to enter, right? Take it all out, and in the process, they build buy side liquidity, right? Have the, you know, larger bullish break of structure, which begins to induce traders be like, oh, okay, like we're bullish now. We just had a bullish break of structure, but you know, put two and two together, and you kind of see the um, further liquidity targets to the downside, right? So obviously, this would be this point here and the point beneath it, right? Does that make sense to everybody? If anybody has any questions, let's see. Uh, do I always recommend 1 hour to start at the higher time frame? I like to, like, just you don't have to really look at it every day, but just to get like a good reference for targeted liquidity, just kind of gauge what price is going to be trading towards or away from. Kind of depends, um, like where you are in price action. If like you just had an inducement on the 1 hour, then you're trading away from it. And let's say if it was a few days ago, then more than likely you're just gonna just be trading in line with that, trading into um, targeted liquidity and just taking continuation trades. Um, UF yesterday Asia high I consider as an inducement. No, no, this is an inducement. This is a fake break of structure. Right? I view this as a fake break of structure, which I said was a form of a inducement. This isn't really a fake break of structure here. It's just a new higher high when Asia high is induced versus like kind of the point of trying to like just looking at it here. You actually have a new lower low made. But when I see just kind of referencing like the last bit of price action, Asia high Asia high itself here is just a new higher high. Not really a fake break. If you wanted the fake break, it would be from this point here, like this guy here. Um, but they're both inducements. This gets people in the wrong direction. So does this. I might if I accidentally said I didn't view it as an inducement, I apologize. But they're essentially different bits of price action, which should give you the same understanding, right? At least in my opinion. We'll go on to AU as well. Probably be a bit similar to EU. Let me just delete this because I don't know. Probably use this for a previous call. But yeah. So, oh yeah, no, I definitely have used this as a previous call. All right. So coming into price action, look to the left. I doubt there will be anything to the left, but it's always good just to check. And that's why I say it's always good to check. As you can see, you have a major inducement here, right? If you zoom out slightly, this is a major point of liquidity. This is from 2022. The price just induced it with speed. Um, you don't need that part of price action. Kind of the more important thing is to see that this low was taken, right? This is the inducement to trade away from. Now you target this point here. Price has the pullback after this. But now we know that this is a major point of liquidity to the left, which means once we induce that, I mean, you can even see that it's done with speed of momentum. Following this, at this point, you have to be like, oh, okay, this inducement or trade away is done, right? Because not only have we met the liquidity target, right, which, is valid to be like, oh, all right, it'll just be a pullback and continue bearish, which it does, but just below it, you can see that there's a major inducement, right? Which we know, um, hold on, I'm kind of feeling a sneeze coming on. All right, we're good. I just stopped breathing through my nose for a second. Um, well, with the major point of liquidity, right, right, like the kind of the difference between major and medium is that major, I mean, this point of liquidity is from, uh, how many months ago was October? Like 3, 4, something like that. I don't know. Um, it's like, about 2 years and 3 months old or whatever, right? So that's a very significant point that we just took with speed and momentum. And then you just wait for confirmations, right? You like, I mean, you can even see it on the 1 hour. Like there's this buildup of relative equal lows, like a mini trend line thing there, and you have an internal fake break of structure during Asia here. Induce that low, which is the medium inducement of in this case the previous weekly low, which leads to a relevant break of structure to the top side, right? You don't really know that until the new high day is put in. Um, but nonetheless, that, coming into the next day of price action, we know any inducement to the low side is in line with the main major inducement, right? I was going to type that before I had my false alarm sneeze come on. Um, but yeah, I mean, you can just see right off the bat, price makes a new high, right? And then this is the low, right? This is just a fake break of structure, right? Which is, like I said 5 times, a form of an inducement, and this is in continuation. The major inducement's low, right? Therefore, we expect this high to be taken, right? Price takes it, pullback, right? And then obviously all of these points to the left here are just targeted liquidity, right? Because they go against like if you viewed this as a 5 minute chart, you'd have breakout stop losses here, 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 and even here with the stops above Asian high in this case. It's like the same exact, like that's what I try to get across, or whatever the word is. That's the point I try to make a lot of the time, is that it's just targeted liquidity. It won't lead to a full-on market reversal, right? I really hope that makes sense, because that, you know, really will assist with overall direction. Um, and kind of, not looking for uh, sells when, at some point, the market is going to start to flip and trade bullish, right? Um, so kind of when you have this point swept over here, this has the characteristics of an inducement high, which we know just meets targeted liquidity, but on the intraday level, it can still be viewed as an inducement, right? Therefore, this becomes a point to trade away from on the intraday level, and then you can very clearly see trend line liquidity has been built up, leading to the targeted liquidity being taken. Trade away from price trades away from that. Eventually, ends up taking out the actual entirety of the trend line, right? Because it takes the low. And now this inducement here is aligned with this point here, right? Which is the major inducement. And then obviously you have all this stuff in between. You induce that previous daily low, you induce this previous daily low, kind of with these vectors down here. Then it just leads to a relevant break of structure here. Right? And then in here, you have an internal fake break of structure on the 1 hour. This mitigates out of Asia low and continues bullish, right? Kind of the same concept. Puts in a new higher high, puts in another higher high here, right? We have a fake break of structure during Asia. And remember, since it's an inducement during Asia, it's going to hold more weight since this is on AUD. Just fills the imbalance here from the prior day, mitigates out of that, and then you can see here, mitigates the low of the fake break of structure, continues, takes the high, and looking to the left, very similar to EU. I would have anticipated they'd be similar because they both paired with the dollar. Um, but yeah, AU same thing. I would expect this high to get taken. And again, like I said, the reason for that, even though this at a point in time was an inducement, it becomes targeted liquidity once the point is met. Um, and then we'll see if we trade it like once gets induced here, like we'll simply just see how price action develops and whether we trade away from it or we'll start continuing higher to take out whatever is up here like this point, these guys over here. But that really depends on how everything develops in the future. This is just kind of how I look at the um 1 hour, and I like it the most in terms of for the purpose of identifying, like I have done a lot of calls before, in terms of intra-week direction. You know, this is all kind of tied into one another. Like those series of calls that I did like a month or a month and a half ago, in terms of identifying the inducements which leave a lasting effect on price action, all that stuff. It all ties into together. So like if there was an order of videos, I would say to watch, I would say watch that series of three, um, and then this one. It kind of ties everything together very nicely. Um, but yeah, I really hope that helps in terms of identifying direction. And then um, it's really not anything game changing with remaining dynamic in your bias. Like if you simply see a inducement high, let's see, let's go into intraday price action, right? AU, pretty simple today. Leave, you really basically just have a inducement low at the beginning of Asia and then an inducement high. This takes the high a little bit more clear, right? And then it begins to build sell side liquidity with this internal break, this break, then ultimately the inducement Asia low, which makes there be relevant liquidity above here. And then kind of what I'm saying is when you remain dynamic, for whatever reason, let's say you anticipated AU to be bearish. I don't know why, but let's just say you did for the sake of example. Um, when you start to see sell side liquidity being built into the market or built up, right, in the market, um, at that point, like I'm not saying a full on alarm should go off on your head, but like you should begin to start being like, oh, okay, am I on the right side of things? Well, now we're just building a bunch of sell side liquidity, and I'm anticipating bearish price action. So maybe I'm wrong because why would they build a bunch of sell side liquidity if price has the intention moving lower? Usually, like I said, it's the inverse, right? If they want to move price lower, they'll build up an abundance of buy side liquidity and vice versa. Um, but yeah, especially once you have the inducement of Asia low and the relevant break of structure during London or during Frankfurt session, at that point, you got to shift your bias because you're just going to get caught in the wrong direction if you don't. Um, yeah, that's kind of what I mean by just remaining dynamic. Just essentially just map out everything what just happened or what has happened. And I think the best way of doing this, I believe, um, who was it? I think it was me and Riyadh spoke on this a few weeks ago at some point. The best way to, it's like not make things up that aren't existing, um, in my opinion, is to one, either record yourself while trading, which is a little bit more intensive because I don't know how much space you guys have on your computers or whatever. Um, the second best way, which I used to do, um, not as much anymore, but kind of when I was trying to solidify everything back in the day, was I would simply just annotate like in live price action, everything that was happening because what you'll find is that it's a lot more difficult, um, for lack of a better word, to BS yourself if you're typing out everything which is happening, right? Because if you have to physically type what you're seeing in the market, it's a lot more difficult to make things up. Because I at least for me at least, because something in your brain would be like, oh, this is right. Like, why are you writing this? But when you're actually typing something out, especially in live market conditions, it helps a lot in terms of not making things up. And I hope that's a technique that you guys begin to incorporate. Like literally, the best way to do it is if you just look at my daily markups, just essentially just type out what you know, kind of like the same idea of what I type out. Like it's really the same structured approach every single day. Simply jot down what happened in Asia, right? I note down who's in the market, like well, what direct like is sell side liquidity in, is buy side liquidity in, what groups of traders are in. So like is it breakout, break and retest, trendline traders, like whatever, right? Get an idea for who's in the market, right? And then I essentially wait for the inducement phase, right? See if there was any sort of fake break of structure or internal fake break, whatever. It's the same concept. You wait for the inducement phase of the market, right? Once you see some sort of inducement, note that down and see how price develops afterwards. If you see a relevant break of structure, which happens during like Frankfurt or London session, kind of like on AU, at that point you should begin to think like, oh, okay, well, the entire day since Asia highs built sell side liquidity, and we just had a inducement of Asia range during Frankfurt session, and price leads to a bullish break of structure, relevant break of structure. I don't understand how you be able to go wrong if you're jotting everything down and annotating it on your chart, right? Because when you try to keep everything in your stuck in your head, or stored in your head, not stuck in your head, I don't know how many pairs you guys look at. For me, it's five, but really I focus on two or three, because there'll be a few that aren't necessarily clean. But it's a lot more difficult to keep track of everything on more than one pair, really, in my opinion, if you're not writing it down. Or no, well, not you don't have to write it down, but typing it, right? Um, yeah. Do you guys have any questions regarding that? Let's see. Oh, let's see. What Roger said. EU last week considers the inducement high on Wednesday, the inducement to trade away from. All right, let me go to last week first. Um, EU last week, the inducement high on Wednesday. Where's Wednesday of last week? Oh, here. Well, I already provided the reasoning for this. Remember? Go over this again really fast. Here and here, here. Right. So at this point, this is the inducement trade away from. You can see a small value either here or here. You can see the relevant break. Right. Price ends up taking out this liquidity point entirely. But like I said, remember the characteristics of a fake break of structure. Speed and momentum, right? I know Joe touches on this quite a few times. When you have a break of structure with speed, and in this case, vector candles, so like very large bearish candles with speed and momentum, more than likely that's going to be a fake break of structure. Because just think about the amount of people that see this as a very clear break of structure. Even if you go on the 15-minute here, right? Like this is a very clear bearish break of structure. And you can see the speed and momentum in the market, right? I'm not disagreeing that this has the characteristics of an inducement high. I just view this as price meeting targeted liquidity, right? Pulling back, but on the pullback, it eventually leads to an inducement low, right? Which is your fake break of structure on the larger time frame to trade away from. Meaning that this point is protected now because it becomes an inducement that's visible on a higher time frame. And price just simply has internal to all this, right? You have internal inducements, right? Like such as here, Asia low inducement mitigates it, right? You have all this. This example here is very similar to this here, just a smaller bit of price action, right? In terms of like they're pretty similar, right? Kind of what I'm getting at is you solidify, one, two, three relative equal highs here. It's actually really good. I think I already said this, but there was a really good sell on EU um, on Friday. Um, but solidifies the equal highs, puts in a new low, right? This induces people to think that the market is bearish, right? Similar to this case here, right? This just mitigates the mitigation, which is like your third order flow. So inducement, mitigation, mitigation of mitigation, right? then just smokes all sell side liquidity. But this is targeted liquidity, right? Therefore, we can still expect for this low to get taken. Not that you're trading during the first hour and a half of Asia session, but kind of like I said earlier in the call, when you take targeted liquidity, price more than likely will just lead to a pullback rather than a full-on reversal. And if it does, like in this case, that just becomes the inducement to trade away from. And it's really helpful if you're confident in overall direction as well, right? That's just kind of my 2 cents on it. You see speed up and speed down as well. I see the speed up. I see the speed down and the speed up. I don't see the speed back down. Right. I see this as a little bit of choppy price action, right? Like you can kind of tell on the um I think you guys get what I'm trying to mark out here. Oh, on Wednesday? Yeah, no, speed up and speed down, right? This takes targeted liquidity. This leads to the pullback, which ends up turning into an inducement, right? Because you have speed on the way down, which is your fake break of structure, which then establishes this as an inducement to trade away from, right? That's kind of what I was um, trying to get at. And then, just in terms of referencing targets, right? If this was the main low that you just took, right? Very rarely, price will just simply take out that point. And then you can even see, like, if you just start to look slightly on the at higher prices, you can see the equal highs here, right? You can even see as well when you have this break of structure here, it makes equal highs with this daily high, right? It might be a little bit more visible on the 1 hour. But you know what, like, does that make sense? Like, once you start to begin to look at it on the larger perspective, um, you can, put the reasons as to why this is a fake break, right? And I think the most obvious one needs to be the speed of momentum, right? And then obviously once you have that, more than likely this will get taken, right? And then once price, kind of halts here, right? Because you expect this to get met, and then you can obviously see that price continues much higher, like after taking that, and then you'll see that price creates 4-time equal highs, takes it out, but then after in the process of taking it out, it creates equal highs again, right? With the actual, you know, like a swing high above this swing high, right? And then, like you said earlier, for the purpose of solidifying the equal highs, ideally you need to see a bearish break of structure, which then I would view as a fake break structure. Maybe it taps in somewhere in here and continue higher. This is kind of what I'm anticipating on EU. I would like to see. But yeah, any more questions? Going once. I hope I was able to assist you guys in terms of tradeaways and inducements compared to targeted liquidity. And the bias development is pretty straightforward. Like I said, um, best piece of advice, just annotate everything that's, you don't have to go and like, or start writing paragraphs on your chart. You can just jot down what you're seeing, in live price action. When do I plan to trade live with you guys? I spoke to Joe, a couple of weeks ago, probably the next, um, time he goes live, for a trading session, I'll jump in the call with him. Um, and I forgot to stop recording. I apologize.